With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by channelchek. This roadshow features Frank Ingriselli, President of Indonesia Energy, NYSE ticker symbol INDO. Following a formal presentation, he is joined by Michael Heim, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on Indonesia Energy on channelchek.com or by clicking the link in the description. With that, I am pleased to present Frank Ingriselli.
Great. Well, thank you. Thank you to Noble Capital Markets and Michael Heim, who we'll hear from at the end of my presentation. And good afternoon there in the East Coast, and here where our office is in California, it's still the morning time. But I'm here to talk about Indonesia Energy, symbol INDO on the New York Stock Exchange, NYSE American, our cautionary statement. I believe you might have been given the presentation sent to you or access to it, but it's very easy to go to. You don't need to look at it. You'll see it on the screen here, but you can also get it right by going to our website at www.indo-energy.com, and you can look at it there. But as we note on this opening page here, again, INDO is the symbol. We completed our IPO in December of 2019. I think it was December 19th. And interesting, that was the last IPO done for the year in 19, which actually happened to be also the last IPO of the decade. But what was interesting is there hadn't been many energy IPOs. It was sort of a disfavored industry. But now, when we did that IPO and today, oil prices are higher today than when we did that IPO in December of 2019. So notwithstanding COVID, demand is getting up there. It's now become a more favored sector, but it will become even more favored. So I think to investors, I think this is the great opportunity right now to buy into these kind of stocks that have great development plans, great future plans to drive shareholder value. So I encourage you to look at good investment opportunities, and we believe this is the right place at the right time, and Indonesia Energy is one of those companies that will profit and will benefit from this increase in oil prices based on the activity we're doing right now. So I'll talk a little about our current operations. We announced several months ago that we're on a program to drill 18 wells over the next 3 years, but more critical is, what do we have for you now? Well, what we have for you now is a rig is out there. We're drilling 3 back-to-back wells. We finished drilling the first well. We finished logging the first well. We're cleaning up right now, and we're ready to do perforations in what is the oil zone. And I can tell you it's as we expected, and you'll hear what our expectations are for the wells we're drilling later on. But we see exactly what we were expecting, so keep your eyes posted for announcements maybe next week or the following week, and we'll also do an investor conference call on the results of that first well. But what happens is that rig then is going to move out, step out, drill well number 2, and then drill well number 3. And then continue, we would expect 5 wells over probably not by the end of this year, but sliding into first quarter of 2022. What will those 5 wells do? As it notes here, we expect to increase production from those wells by 400%, cash flow by 400%. Cost of production, very important, below $20 a barrel. So, great upside, great cash opportunity in our development plan, and we're acting on it right now. So I'll talk a little about our different blocks here. As you can see on this, we've got two assets. One is called the Crew block, that's in green. and then our Citarum block, which is in red. The green block is on the island of Sumatra. The red block is on the island of Java. But a little about Indonesia. A lot of people don't know about Indonesia, but I do. And I'll talk a little about my background and my history in the oil and gas industry. But Indonesia is the fourth largest country in the world after China, India, United States, and then Indonesia. It is the largest economy in Southeast Asia, number one. It's been growing at a clip of over 5% GDP growth for the last 11 years. It's had a stable government. But most importantly is, we're in the sector of oil and gas. Indonesia has been, people have been working in Indonesia from around the world for over 100 years. But really the sweet spot has been the last 50 years. And I'll just mention about my background now. I came from Texaco Inc. I joined Texaco in 1979. I worked there for 23 years. I rose up to become president of Texaco International Operations. And when I exited Texaco in 2001 because Chevron took over Texaco. When Chevron took over Texaco, the number one producing asset in the world for Texaco was in Indonesia, number one. And for Chevron that took over Texaco, the second largest producing asset in the world for Chevron was in Indonesia. Together, we were producing about 1 million barrels a day. And if you go to Chevron's website today, you'll see that they'll talk about how they've produced over 12 billion barrels of oil, $1 trillion of cash flow out of Indonesia. That's how important that country is in the oil and gas industry. And it's not just Texaco Chevron in the past. You'll see, I'll just pass over it quickly, but there's a slide in here that shows every major company, energy company in the world operating in Indonesia. That's how important it is. That's the history, a history of a government in the energy industry that's transparent, that's financially stable. It has the legislation in place to encourage and the development of oil and gas industry. So, when I left Texaco in 2001, I started up a couple of public companies, oil and gas companies. I brought them from private onto the New York Stock Exchange. And I left that last one about 2 years ago. And what happens? Here's Indonesia wanting to do a IPO. And I joined the company, and it's just I'm having a great time. I'm having a lot of fun because I love this stage of taking a company that has, modest production right now, about 250 barrels a day. That brings us not quite cash flow positive, but one that has a development plan that's going to dramatically increase production, dramatically increase cash flow. That's why I joined. That's why in the sunset, and hopefully it's a very long sunset of my career, I'm here at Indonesia Energy, and I'm having a great time and want to deliver in this operation shareholder value. So demand for energy in Indonesia. When you have a country that's growing at a clip of over 5% for 11 years, the demand for energy products is going to be there. So, whether it be for oil or natural gas or, electricity or whatever, in Indonesia, everything is growing at a 5 to 6% clip every year. So a lot of economic growth there. And here's that slide. Every major company in the world operating in Indonesia and continues to operate there with great success, with success ratios of 70 to 80% on wells. But remember, in our field, in the Cru block where we're drilling right now and we'll continue to drill, we're really doing more of what would be just drilling production wells, step out wells. So the success ratio should be much higher in a venture like ours. Here's a little snapshot again of the Cru block. It's on the island of Sumatra. And by the way, island of Sumatra is where Chevron Texaco has their assets that was producing 1 million barrels a year. But after owning that for 50 years, that production is down to 200,000 barrels. But that's where they are. They're on the island of Sumatra, a much, of course, bigger block. But there we are, 63,000 acres, and you can see in the picture there, the yellow and the green, those are different fields that we're going to continue to work on and continue to drill wells and drive cash flow with a margin that's a really incredible margin. That's why Chevron Dexico has produced $1 trillion in cash flow. Here's a picture of that first well being drilled, and I just thought I'd show you a little snapshot that it's really there. Rig is really turning. We've got video, I think, on our website. You can see it. But this is the slide that tells you everything about why these wells and why this crude block will mean so much, not just to the company and bringing us cash flow positive after well number one, but why this hopefully will drive shareholder value and the stock price as people wake up and realize, wow, we've got like $75 a barrel for Brent. So as you can see here, typical well, one we're drilling right now, the depth we're drilling is 3,300 feet. This isn't anything fancy like my last company that's drilling horizontal wells, that's doing fracking and shale interests. Nothing like this. This is conventional drilling, 3,300 feet down. The cost of drilling that well is about $1.5 million. You'll see a decline rate there. We say the decline rate is 21%. This is in that upper right-hand box. But 21% decline rate for some people might seem high, but on my last company, Pedevco, you're drilling wells in the shale blocks, you're getting 70 to 80% decline year number one. So this is actually a very good rate of decline. But I want to call your attention over to the top left box tells you that we expect the average production about 173 barrels a day. But given that scenario, bottom left block, what do you get? This slide now has to be even, changed again. So we have here, if you had $49 a barrel and $63 a barrel, what does a company get out of that in year number one? Well, year number one, not gross, but year number one net revenue from this first well and the second well and then the third well, it'll be drilled back to back here, will be $3.3 million. So, if you sit back and you look at that here, it's costing us $1.5 million to drill. And net revenue, year number one, at $63 a barrel. We're at 75 right now. $63 a barrel, you get 3.3 million back. What an investment. I wish I could take my money and put it in and get over 100% back in year number one of what I put in. So this is what's should drive the value of our company, should drive shareholder value of the company over the next few years as we develop our big asset, our long-term strategic value asset, which I'll bring up next. But this will drive cash flow. This brings us cash flow positive. This gives us a margin. When you got $20 cost of production and going down below that after these next few wells, that's what's going to drive the bottom line with that kind of a margin rate. Margins for these shale wells in the US are probably $40 or more. So a very, very good asset, and we're going to drill the heck out of it. So now what's the long-term value proposition besides drilling and cash flow, early cash flow out of the crude block? This is our Citarum block, and we call it Derisked, 1 million acre property. So that red you can see, that's on the island of Java. It's on West Java. And actually in that right-hand picture you can see there, the blue color there is the offshore. We're not offshore, we're onshore. And you can see the outline of our Citarum block, 1 million acres. What's 1 million acres? 1 million acres is about the size of 27 Manhattans. So 27 Manhattans. And what you can see is in the top left of that box, where you see our block, says Jakarta City. That's where Jakarta is. Jakarta is the capital of Indonesia, probably has 25 plus million people. And of course, when you have a city in the capital city, there's a lot of industry and everything around there. So lots of customer base there. But this block, Citarum, is a natural gas block. So different from Sumatra, which is all oil, this is natural gas. And what does natural gas go for in Indonesia? Here in the US, I think we're about $2 to $3 an MMBTU. In Indonesia right now, you're at over $7 an MMBTU. So you're talking about a natural gas price 100 to 200% higher than you have in the United States. And that's because they're gas short. They got to bring in gas offshore through LNG projects that they're paying a lot of money for, over $10 an MMBtu. So what the government has done is encourage the development of natural gas blocks. And we won this block in a competitive tender several years ago. And we're now on the cusp of starting to do the work and drill the wells. We're doing some 3D seismic there and 2D seismic. And we should be drilling in 2022, maybe in the first or second quarter of 2022, we will start to drill probably two wells back to back. Why do we think that this is de-risked? Well, the reason it's de-risked is right here, you can see these golden drops. There was a company called Pan Orient Energy, Canadian public company. They used to have this block, and they went almost bankrupt about 6-7 years ago, and they had to give the block back. They couldn't pay, they couldn't spend any more money, and they had to withdraw it to preserve their cash. Well, that was the opportunity for us when they went out for competitive bid. But the benefit we got is they drilled 4 wells in this property, in this 1 million acre property, spread out, not right next to each other. And they had 4 natural gas discoveries, very good natural gas discoveries, some under a lot of pressure, which is very good in the natural gas industry. So that's why we call it de-risk. And all around us, as you can see in this bottom left picture, again, pictorial of where the Citarum block, you can see highlighted there, there's a lot of oil assets there in red. You can see all those reds, those, I'm not sorry, not oil, natural gas, lots of natural gas assets all around us. All those lines running through our block, those are natural gas pipelines. So the infrastructure is there, and it's going to bring that natural gas up to the customer in Jakarta. So, you know, infrastructure there, infrastructure being built. You know, again, the government is very much encouraging the development of natural gas because they want to have a mix. They want to have a mix of coal, of oil, of natural gas in the economy, and especially natural gas because it's the cleaner of the 3. So you'll see a lot of development taking place there, and the comparables when natural gas is coming in at such a high multiple to what natural gas prices are provides a great benefit in the growing growth and demand for natural gas. So great asset for the company, and we will start drilling there next year, 2022. So what you got with us is a short-term cash cow asset that we're going to drill the heck out of, and then also start to develop this long-term 30-year contract to develop that Citarum and the natural gas there. So really a 1-2 punch in the company. What's interesting here, I won't spend much time on this, but you'll see this thing here called the Rankcast Area. The Rankcast Area, we did a joint study program on this, and we've got basically an option to acquire this additional 1 million acres adjacent to our Citarum block. Very important because I didn't mention this, and this is very important. As we develop the Citarum block, the Crew block we own 100%, we're going to keep 100%, but on the Citarum block we own 100%, but we need to bring in a partner. You know, in my 23 years at Texaco, we always brought on mega assets, and this is an elephant mega asset. We always brought in partners. So we'll bring in a partner, and that partner will probably be one of the major energy companies. And what happens is, you know, whatever we bring them in for 50%, 60%, 40%, 70%, we'll determine that in our negotiations. But generally, they'll come in at a premium. They will be our bank. They will finance our share of the operations as we go forward. So a real win-win for our shareholders and for that major energy company to get 1 million acres right next to the capital city. So that's the plan for Citarum and how we will finance that asset. Quickly, our officers here, I'll point out on the top left and the bottom right is Dr. Wirwan Yusuf and James Wong. Those are the individuals that started this company. They kept it private for a few years. They put in over $30 million of their own money into this company and then hired what they felt were the best people to run this company, whether it be operational people like Charlie Wu, an American who's had 40 years of experience in the industry, and especially there in Indonesia. Mirza Syed, same kind of experience. You've got myself that I talked about, our comptroller, our chief financial officer, Greg Overholzer, lives right here in California next to me. He was the CFO at my prior startup, so we know how to run a public company. We've got a great auditing firm at Markham, and we've got our outside counsel at AGS. So we've got a great management team. And now we've got additionally a great independent board of directors. And our most recent addition there, I have to point out, is in the top right, Michael Peterson. Michael Peterson was with me when I started up Pedevco, and he did become the chief financial officer, the CFO there. And actually, when I retired from there, he became the CEO. And he's got enormous amount of financial experience with Goldman Sachs, Merrill Lynch, others, and other public companies. So he's going to be a great asset for governance, great asset for bringing in opportunities and guiding us. So I think we've got the management team, the board, and most importantly, the assets, and one that's going to deliver very near-term cash flow and make us cash flow positive right after this next well that we completed. So excited about the company, the long-term prospects and the long-term value. And I think I'll sort of stop it at that point, and I'll ask, I'll turn it on over to Michael.
Great. Can you see and hear me okay?
See you now, yeah.
All right, Franco, good morning. You're still in California, you said?
I'm in California, yeah, right down. Most people don't realize it, but Chevron's headquarters is about 3 miles from our home here. They think it's in Texas, and everybody thinks all oil companies are in Texas, but they're here in California, so they're right nearby.
Well, I just wanted to make sure I got right whether it's good morning or good afternoon. You've already answered my first question, which was to ask about the results of the first well.
Sure.
I just want to repeat, did you hear you say we'll probably get actual results in a week to two, but in general, things were falling in line with expectations?
Exactly as expected, and we thought we would see, and we're ready to start to perforate and start to produce. So let's see, let's wait for the announcement and see what happens there. But we're excited about it, and that our prospects were confirmed. So.
And then looking at, the next well is already under production, looking at another 30 days for the second well. Does that sound about right?
We'll start to wait after we perforate here. We'll move that rig. We'll start to move over probably in the next few weeks, start to move over to the other location, which is pretty close by. So we already have that location prepped up and the third location prepped up. So it should move pretty quickly. So, and hopefully this next well, Indonesia had some a little bit of spike in COVID, and they shut down not operation, but transportation between the islands. So we needed to get some equipment, and we needed to get some other supplies that had us have to stop drilling for a week or so, and so it just delayed the drilling by a little bit. But now things are back to somewhat normal there. So it should move a little quicker this next well, I would expect. So. Whatever it takes.
And how are we doing, or when can we expect the location identified for the fourth and fifth well?
We'll probably, at the point when we're drilling that third well and see what we see, and we're doing some seismic work to determine where those next wells will be. I would say probably in the end of the third quarter here, we will make the decision on where those next 2 wells will be. Will we continue with just stepping out, or will we become a little more aggressive and look for, pushing the envelope a little bit? So to get something to expand the operation and expand the potential for the block. So we'll make that decision third quarter. By the end of the third quarter, we will make an announcement as to where those well number 4 and 5 of the new wells will be drilled.
You've pointed out the incredible returns at this level of oil prices. It kind of begs the question, why do you think about accelerating drilling? What's the bottleneck from really doing more than what you said?
Yeah, no, that's true. It's a good point. I think I think we are thinking about that. I just had discussions yesterday morning and this morning about that question. And with oil prices zooming up, we need to go get another rig and look at accelerating programs later into the year. So, here we are, we said we're going to drill 18 wells over a 3-year period. With oil prices where they are and what we expect the success of this well number 1, 2, and 3, and et cetera, I think, maybe we'll accelerate all that drilling activities to be in a much shorter period of time to capture. Maybe bring in 2 rigs into the area and drill that. It makes sense with oil prices at 75. It's a very, very capture that moment and capture that early cash flow for the company. So we could accelerate drilling on the Citron block to do that, and maybe not have to raise much capital to do that work. So.
We do have one question from the audience, somewhat related to the strong pricing, and I don't know if you can answer this or not, but basically it says, I'll read it straight. With the first well drilled and an expectation of 200 barrels of oil to come online, why do you think Indo's stock price remains unchanged and perhaps even down a little bit?
Yeah, I mean, that's a great question. That's why I think there's this window of opportunity here right now. I mean, one of the issues is the liquidity of the trading. So the trading volume hasn't been as strong as we would like, and it's part of that reason is the float that's out there and how much shares are available out there. So we're trying to get that story out. I think people are probably, I do believe that when we announce this well and we announce whatever it is, hopefully the marketplace does start to see that and react to that, and I think that'll be sort of the natural progression. But I have to say, we're a micro cap energy company, notwithstanding that oil prices have zoomed up. If you look at some of the other micro cap companies, we've performed, our stock has performed about the same as some of those. We all hit a bump. So a few months ago, February or so, we all hit a bump and we were up to, about $9 a share. And then same with my old company, Pedevco, was up to $3 a share. They're down at $1.50 right now, and we're down, around $5.50 to $6. So, they're all down from, and then there were several other companies that are in the same kind of boat. There was a quick spike and then they came down. But I think what's going to happen here is, capital is going to realize that the companies that will benefit will be some of these small cap, micro cap energy companies. And the attention will get paid there, and I think you'll see volume go up and hopefully stock price go up with an announcement of a discovery and everything like that. So, that's what we're working on. That's why we're here today. That's why we're with Noble Capital and with Michael Heim and his research reports and doing these non-deal roadshows kind of things. So, we got to get that story out, and I think we're doing it effectively with Noble.
Yeah, I think it is kind of a large cap, small cap type of issue. When you see a sudden move in oil prices, a lot of investors initially think the large cap, and it sometimes just takes a while for the small cap to catch up. Yeah. You're doing a good job getting out there and telling the story. I want to jump back to the Citron for just a little bit, and that's to ask maybe a bigger picture question. As you look at having different blocks, and I know they're different kind of risk levels and different fuels, talk a little bit about how you make the decisions where to spend most of the money. Is it strictly a return issue, or do you want to keep diversified, or how do you decide about which project to accelerate?
Yeah, I mean, it's one thing is, I must say one thing is that we are under an obligation. So sure, it'll be great just to go out there right now and just continue to drill 50, 60 more wells and crew right away. And maybe we'll do something like that. But where the cash is short but we need to look at the long-term prospect of the company. And so, we got to put capital towards that Citron block, and we're required to. So the contract with the government requires us over the next few years to drill 1 to 2 wells and to do additional seismic work. And so they're going to drive, because they don't, as a government, they don't want us just to sit on an asset like that and not develop it. And so we're required and will be pushed to develop it, but we're not being pushed. We want to do that. And so we'll have a mix of capital between the two and drill those first 2 wells. So I think that with an acceleration of the crew activities, we might need to do some capital raise to 2022 for funding of some of that drilling if we want to get a little more aggressive in the Citrum block. But we'll determine that at that point in time, how more aggressive we want to get there. But we want to drill it because that's the big long-term growth of the company. We need to get those 2 natural gas discoveries, drill 2 wells, get that, and then start bringing in like the company 4 miles down the block or whoever into the asset.
You mentioned a potential capital raise. You started out in a very strong position with the IPO, and cash is down under 10 million. At what level do you start to get uncomfortable? And I know you're going to hopefully have cash flow coming in here that'll build up the cash position.
I mean, the nice thing is that we're not just in a vacuum right now with no production. So notwithstanding this well that hopefully will come in just as expected, we are getting cash flow from 4 wells that we've got producing, and with $75 a barrel, it's providing a lot more cash than it was. So, but we're not cash flow positive. We're draining money. We've run the company very efficiently. Our G&A and everything like that. Look at it. We've got to have one of the lowest in the industry in terms of how efficiently we run this company. But yeah, I mean, this 1 well and then the next well we're going to drill, and the 3rd well should put us in a very strong cash position that we could self-fund all the wells going forward and crew and do that. But to jump in and drill a $7 or $8 million well, or 2 of those, $15 million in Citrum next year, we're not going to generate probably enough free cash to do something like that, and we'll probably have to raise some capital then. Hopefully, with an announcement that this well we're drilling right now is a discovery, and then the next one a discovery, the next one is a discovery, and our cash flow is up 200-300%. That'll drive the stock price. People will say, hey, Indo Energy is delivering on its development plans. It was later than we expected, but we went through this horrendous pandemic, and everybody got delayed a little bit. But hey, we've got oil prices that are higher than they were pre-pandemic. So it's economy's growing around the world, and puts us in a great position. So we'll do that. People, yeah, that's it.
What are you hearing from the other majors at this point that are active in Indonesia? Are they stepping up drilling?
I think some of them are stepping up drilling. I mean, Chevron down the block here is going to be their interest, which they've held for 50 years. And when I was president of Texaco International, they will be losing that asset, which is right now 200,000 barrels a day, in August, June, July. So just a couple of months from now, August 1st. That asset, after 50 years, the term has expected 30-year term, the 10-year extension, the 10-year extension. But they put $100 million into that asset to maintain the production around 200,000 barrels a day. But that's an asset that somebody else will be taking on and investing a lot more money in there. So maybe another major will step in there and take on that asset. But I think that the national oil company, Pertamina, will in particular do that. And they'll probably try to bring in more Indonesian companies for these assets. But money is being spent there right now. I think there is opportunities in the, I'll call it like the M&A space or the acquisition space going on there for production opportunities. We're in a benefited position because here we are as a public company on the New York Stock Exchange, that we can use our stock or whatever for looking at opportunities to acquire. But we're not trying to get distracted with that. We want to get our wells drilled right now and our production going up 200-300%. But we can't put blinders on and not look at opportunities. So we'll look at that, and there, we hope that there might be something to look at and acquire in the future.
Don't want to push the acquisition question too much, but what type of thing might make sense for you? What size would you be comfortable? Does it need to be something that's adjunct, tuck into what you already have, or are there
I don't think we need another Citrum block, another 1 million acre block that's a natural gas block that's not de-risked, completely de-risked. That's a development opportunity. So I think what would make most sense is looking on like the island of Sumatra, where we got our production now, looking at similar opportunities, because for those blocks, whether it was ours right now, where we're seeing about $20 production costs. I mean, the Chevron block, the Rokan PSC, where they are producing 200,000 barrels a day. They have production costs in the same range. But, you know, there's a lot of other areas there in Sumatra that are oil prone, similar geology that, you know, we can look at and step into. It's, you know, that will just change value of the value proposition of the company, and, you know, maybe move us from a micro cap to a bigger micro cap or a mid cap company. But there are opportunities like that, and I think the fact that we are delivering on what we're doing right now, and we brought, you know, we're a New York Stock Exchange company that plays strongly in a place like Indonesia and in Sumatra, with some of those companies operating these smaller 2, 3, 4, 5,000 barrel a day assets. So, you know, we're definitely going to look, and we are looking at some of those. You know, we're being approached, and we're looking at them. And so, you know, we'll if it's right and it fits the company, you know, we'll do it. You know, it's another way to grow shareholder value and take the benefits of being a public company and use that as our tool.
Thank you for joining us for this virtual roadshow presentation brought to you by channelchek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and micro-cap companies.